In this video, we go over how you can use the Managing My Money Excel spreadsheet not only for zero-based budgeting, but in this case, forecasting cash flow. For those people who do not have access to the Managing My Money Excel sheet, at the very end of this video, there is a link to my YouTube channel where you can find instructions on how to download and access the tool yourself. So let's jump into a discussion about forecasting cash flow. From the home page of the application, we can see the forecast results, which are that we have a zero balance at the end of the year and our cash flow status is okay throughout the year. No issues detected. We're on the home page, so we're going to jump straight to, we'll be looking a lot at if you look at the bottom here, the Manage Year and the Manage Forecast tabs. So first let's look at the Forecast tab, since we're talking about forecasting. So this is the report that shows your monthly cash flow forecast and end of year results in detail. So my budget starts in January, goes through December, and you can see according to this that my actuals, I've gotten income in through May, and everything from June forward is projected into the future. So June is the current month, and June and forward is the future. The table in orange, second from the bottom, is the cash flow table. So this forecasts starting from the initial available funds that you have in your buffer account, and we'll talk about that in a second. It forecasts this second to the bottom row in this table is the end of month forecast of the amount of cash that you will have in your account. And you'll see that in this scenario, we end the year with the same amount of money that we started the year at. And that's because all of our income is spent, we're on a zero-based budget, so we've allocated all of our income. All the income that came in was used as we expected. That's the plan. And therefore, at the end of the year, we don't have to dip into the extra funds that were available on December 31st in our accounts. So that's why we end up with the same amount. But what we're going to look at today is how you can use the tool to flag or identify any cash flow issues in your planning sessions. So to do that, we need to first look at this first number, which is the amount of money that you start at in your accounts. So if you go to the Manage Year tab, you'll see that there is a cell here to enter the initial available funds. Now that's important because initial available funds is all of the money that you have in all of your checking and savings accounts minus any credit card balances that you have on the day before your budget starts. So in this case, our budget started on January 1st. So on December 31st of last year, if I look at my two savings account and my one checking account, and I add up all that money on December 31st, and then I subtract the balance of any credit cards that I have, that's my current available cash. And so that's the amount that I will put in this box. And that sets the baseline for the cash flow forecast. Okay, now that one you enter at the beginning when you first setting up your budget. It's an important number to enter. Now the numbers here in blue, you'll see January, February, March, April, May, we have these numbers in blue, and the label says minimum required in buffer account. What that really means is this is the calculated amount that you do have at the end of the month in your account after all of your expenses have come in. So basically you started out with $4,500 in your account. In this case, in January, I had income come in, I had expenses leave, and if I add up now at the end of January, the last end of the day on the last day of January, I will have, if I add up all my savings accounts, my checking accounts, minus my credit card balance, any balance on the credit card, I will have this amount of money, right? That is my cash flow. Now that's computed. So what it's important to do to make sure that this is an accurate number, this will not be accurate, for example, if you do not record some transactions. Let's say that you forgot a big expense that came in and you didn't record it in the system. If you're using Tiller Money, that should be imported automatically. But if for some reason that didn't get put in, then you should reconcile your bank balance at the end of the month, just to check the balances at the end and make sure that it matches. And if where it does match, I encourage you to go in here and just go ahead and type in the amount that says that is your note that you have reconciled the amount in your accounts, and it does match the amount that it was computed, which means all of your transactions that entered and left both your savings accounts, your checking accounts, your credit cards have all been accounted for in your tracking system here. And they've all been, what do you call that, categorized and everything. So you'll see that this box goes green, and that's just a reminder to you that yes, you have done the due diligence of at the end during February. Sometime you go back to January and you reconcile the end of January and make sure that it matches. Now, if it doesn't match, so let's say that now I'm starting March and I come back to February and I reconcile my accounts, I add them all up, and I end up with $11,520 in my accounts. Now it's going to flag it with an orange color here that says, hey, there's something wrong, because according to what you have recorded, you should have more money in your accounts than you have. So likely what this means is you've missed recording something and you need to go back. I have a separate video on reconciling with your account, with your bank and credit card companies. So I encourage you to, if you encounter this scenario, go ahead and do that. Now you don't have to do the reconciliation. If you don't, it will, if I delete these, for example, then that's fine. It's going to compute exactly what I actually have. The reconciling is important part of the process, though, because that makes sure that indeed you're working off of real data, that basically your real bank data matches what is being computed here, just to make sure that there's something that didn't get missed in your recording of transactions. Okay, so let's assume here that I did my reconciliation on all my months and everything's looking good. Let me just put that one in here. Let me go 99.45 and the last one, because we're in June, so I'm going to go back to May and check my account 10.312. Another thing that is good to know, because a lot of people get hung up on one thing, some people have issues in maintaining their budget because they see amount of money that is in their account and it looks like a lot of money. It's like I have money to spend, then they go and spend it. But what this system tells you is if your balance box is 0, that money is allocated. So you really can spend it only according to the plan that you have, and if what you're going to spend is not according to your plan, you need to readjust your plan, which is not a problem. Just this helps you to remind you that even though looks like there's a lot of money in your account, it's spoken for, and it's spoken for by you. I mean, you're the one that set that priority. You're the one that said, this is the vacation I want to take, or this is the furniture I want to buy. It's all taken care of. So the value of all your sinking funds is essentially stored up in this value. Now, when you do this, so I talked about your initial cash flow, then this is the amount of cash that you need into your accounts. One thing to note is if you go back to the forecast, again, everything shows on track that you're going to end with the same amount of money that you have, that you started with. I want to point out one more important feature here. The bottom row in this table is an alert limit. This is your end of month low limit. So what this means, right now you'll see that there is no alert limit for the past. The past is the past. We're forecasting into the future if you're going to have a cash flow problem. So if you look at the bottom, you'll see that it's set to 0. What that means is At the end of the month, according to this, as long as you have 0 or more dollars in your account, then you're okay, right? If you go negative, that means that you have planned more money than you actually have available in your account. Now, in reality, that's not. And so, if I look at my, if I go back to the manage year, you'll see that on the top right there is a minimum cash flow, and it'll tell you, hey, and right now I'm in June. It's going to say in August you have a minimum cash flow amount of 1,941. And it's green because it's saying that's fine. You're okay. And if I look at the cash flow tab, indeed, if I look in August, you'll see that this cash flow end of month balance, the low point is indeed in August, and the amount is indeed $1,941. So that's fine. It's saying that everything is good and rosy. Okay, so now I want to, let's step it up a notch, and let's make sure that we're being real. We're talking reality here. Because a lot of times we like to look at the most optimistic scenario, which is I have money and therefore I must be okay. So there's a couple of features here that allow you to make sure that you don't get into trouble, that kind of protect you to make sure that you're aware of any cash flow issues that you should be planning around. The first one, I'll show two things. The first one is here to the right. It's called the minimum balance. And if you highlight over here, it'll show you a little text box that talks about what it is. So my bank, if my checking account drops below, let's say $300, then I'm subject to a fee, and I want to avoid that fee. I never want to pay a bank fee because I've dropped below my minimum, right? And my savings account also has a fee. Let's say, for example, 500, nice round number, $500 fee. That if my savings account goes below 500, I get a fee that month, and every month that it's below 500. So what this minimum balance says is, hey, enter in the minimum balances for all of your accounts, because that's the amount you need to have in your accounts regardless. So in my case, let's assume that I have two checking accounts and a savings account. So that would be something like 600 plus 500, that's $1,100, right? I have to have $500 in one account and $300 in each of the other two accounts. Now look what happened to my cash flow end of month limit, $1,100. So it's saying it's not good enough to have zero at the end of the month. You have to have at least this amount of money. If you drop below this in the future, if it's ever going to drop below that, you will get an alert. Now you'll see that my lowest point in August is still above 1,100. So if I look at my manage year or my cash flow, it now shows, if you look here now, my minimum cash flow now shows $841 in August. So where did that $841 come from? If I look at the cash flow here, you'll see that $841 is the amount I have above my limit. So $1,100 is the minimum I can have. I have $841 more than that. So 841 plus 1,100 is 1,941. So that's telling me, what that's telling me is I can afford to drop or spend another $841, in August before I hit my cash flow limit, but I'm getting close, right? So that's the first thing that helps you to be real in terms of your planning for cash flow forecasting is, putting that minimum balance in. Okay, there's a second important thing, which is forward on the income screen. So on the income screen, there is something here called the week received. So for every piece of income, you have a drop down that allows you to set what week that income is received. Week 1, 2, 3, 4, or unscheduled, right? So you look here, all my income I have scheduled. My first half of the month income comes in on week 1. My second half of the income comes in on week 3. I have a rental unit. I get paid on week 1, and then these come in anytime. Okay, now there can be an issue for some people where their income does not come in this way. Their income might come in, my first week income comes in on week 2. So in other words, I don't get paid the first of the month. I get paid on the 15th for the first 2 weeks, right? Let's say, so come June, the current month. So June 1, I'm not getting paid. I don't get paid until June 15th. That's when my check comes in. When does my second check come in for the second half of the month? It doesn't come in until the last day of the month. So, or maybe the second to the last day. So it comes in on week 4. Now that can be a problem when you're doing forecasting of cash flow, because you don't want to assume that at the end of the month I have only that $1,100, that minimum balance, because remember, at the end of the month I should have received my paycheck. So I should have whatever minimum balance in my accounts, and I should also have my paycheck should be in there. It should be fully accounted for and ready to spend the next day, which is the first of the next month. So what happens here is whenever you select week 4, as you can select any week that you want or any of these options. You don't have to do it, but if you want to use this feature, pick week 4 for that income. And what that will ensure is that that money gets added to, if you look here, the cash flow end of month low limit for alert is now $4,100. Remember, we started out at 0. And then we said, well, no, we need to have $1,100 for our minimum balances. So we need that in there. But now we said, yeah, but I also get paid $3,000 on the last day of the month. That had better be in my account on the last day of the month. So we add that $3,000 plus this $1,100. And this is saying you need to have $4,100 at the end of the day on the last day of the month is the absolute minimum that you are willing to do, because you don't want bank fees and you want to make sure that all of your money that you get paid at the end of the month is available for the next week. So now look what's happened. You'll see that on my cash flow forecast, 2 things turned red. So what they're basically saying is, hey, here we are in June, but in August and September, I have, even though my balance looks good, if you see I have a balance box of green, everything is green, I'm actually on plan. I have enough money. In fact, the amount of money I'll end up in my buffer account is the same as I started with. I'm only spending money that I have. The problem is the order that I'm spending the money. So apparently I have some very large expenses that are coming up on June, July, August, September timeframe, and those are causing me to go over. Now I'm going to make it up later, but that doesn't help here. I'm going to actually start incurring bank fees. I might actually have to use a credit card and not be able to pay it off, because I'm going to have to float a couple $1,000s here and $350 here, and I want to avoid that, and that's what this gives me. Now if you look at the manage year, you'll see that the minimum cash, so there's some indicators that tell you that you're having a problem. You don't have to go to the forecast screen. Let's say you're going along and you're doing planning on this screen for the future, and suddenly you see your minimum cash flow goes red. It'll tell you what a month is your low cash flow and how much it is. You're $2,159 below your low threshold, your limit, right? You still have money in your account. So remember, if I go to the forecast, I will still have almost $2,000 in my account in August, but that's not enough. I need $4,000 because this has to include my paycheck, right? That I'm planning to use the next week. So this tells me, and the other indicator that you have is this red bar. So if you have a cash flow problem in the future, you're going to see this bar will turn red here, and that'll let you look at this one. You can look at the forecast. So now that you have predicted or forecasted a cash flow problem, what do you do about it? Well, in this case, again, if you look at my forecast balance, my plan balance, again, I have enough money. It's just the order of my spending. So now I need to go and look at August, or in this case, if I look at the forecast screen, it's both August and September. So let me go back to here, and I'm going to look at August and say, well, what's happening in August? Or maybe even in July leading up to August. And I can see, for example, well, wait a minute, I have this yard upkeep. I have a big yard project that I'm planning to do in August, right? What else is happening? Well, I had scheduled some medical procedure to be done. I'm planning to pay for it in August. right? I also have some travel in August, and I have a big clothing purchase I had planned to do in August, and maybe I was going to contribute a whole lot of money to my savings plan in August. Well, what you would do in this case is you would say, okay, I still have the money, I just need to move it later in the year to avoid my cash flow problem. So what I'll do is I'll say, okay, well, maybe what can I do? The savings plan, that's an easy one. I'm going to say, let me take out that $800 and I'll just contribute to the savings plan later in the year. So if I take it out here, it automatically pushes to the back end of the year. And you'll see that my minimum cash flow reduced. It was over 2,000. Now it's 1345. So let's keep going. Clothing. Okay, well, 1225. Maybe I go ahead and I still need to buy my clothing, but let me split that up into like maybe $500 here, and maybe I'm going to do, $500 here, and maybe I'll do the rest here in November, 225. Okay. Now you'll see that my August is now down to $600. Okay, let's do some more planning here. Office supplies. Can I push off my? I pay that every month. Maybe I want to push that back, but there's this big yard project. Okay, maybe I push back that yard, or maybe I do it on. I talk with the contractor that I'm doing this, and I tell them, look, I'm going to pay you in 3 installments of $400 here, and $400 here, and $400 here. Right, or 408, right? Okay, now look what's happened. Look at now my cash flow is green, and in August, which is still my minimum, but I have $174 above my low limit threshold. So if I look at my forecast, you'll see that indeed my low limit threshold is 4,100 because I have to have my minimum balance amount and I have to have that paycheck on the last day. But on the last day of the month, I'm going to have $4,274, which is above my low limit, right? And how much is it above? I can come over here and see it's $174. So if I look here, my low point is green. I don't have anything red. I'm perfect on my cash flow. I'm good. Now, you don't need to worry about red numbers down here in the bottom. This is more informational because it's okay to spend. All this is saying is in August, I'm still spending more money than I'm making for that month, but that's okay because that's part of my sinking funds. I've been saving up for it all along. I mean, if you look, I start the month with $10,000 in my account, right? Now, yes, the next month I'm going to be down to $4,000 in my account, but that's because I've been saving. That's the whole purpose of using sinking funds and saving for these things, so you can do these things. But the important part on cash flow is that it's not enough just to have the money. It's to make sure that you spend the money in the right order so that you don't get yourself into a cash flow negative situation. So again, these are all optional tools that you can use. You don't have to put a minimum balance in here. You don't have to come in and set any of these to week 4, knowing now that that's what it's going to do. The minute you set something to week 4, it will go ahead and make that part of your cash flow minimum, so it can flag you to alert you. But these are tools that are given to you to help you to manage your cash flow. And as mentioned, in the beginning, we want to be able to avoid situations where we have the money, but we do not do the forecasting, and we end up having to use credit cards or spending money on fees, even though we have the money to do it, when we could have just planned around it. So I hope that you enjoyed and found some value in this video. If so, please subscribe to my channel and like the video. And if there's anyone else that would appreciate this, by the way, if you watch through this video and you don't actually have this Excel tool, it's a free tool. So there's a link on the video to the channel. You can look at the channel. There's a video that's called Free Excel Tool. It'll give you instructions on how you can send the email in and get the download link to download and start using the tool. Thank you and have a great day.